Welcome to the November 25th, 2024 Advance Report from McGowan Group clients and NetWorthRadio.com podcast listeners. This is your weekly fast-paced tour of the global financial markets. We're going to start with a commodity. Why? Natural gas spiked 48% this month, settled back to a plus 35% at the end of the week. What's going on with natural gas? Well, this relates back to AI data centers. And you've even got oil producers in the Permian Basin exploring dropping their own natural gas plant in so that they don't have to pay for power. Elon Musk did it in Tennessee for an AI data center for XAI. Well, so you're starting to see a trend. It's pretty easy to put a natural gas plant in right away, generating power. And yes, nuclear will play a part in that AI revolution. But the insatiable demand for power also translates to another policy change that I want to show you here. All right, so that's the longer term natural gas. See this $10 level, currently $3. You spent a lot of time down here with oversupply, $1.40 instead of $3.14 during the pandemic. What's happened to natural gas in Europe? That's a key component. Natural gas in Europe, $14.47 per million BTUs. The same natural gas here in the United States, just above $3. How do you arbitrage that or take advantage of it? That's what's happening. Liquid natural gas exportation. There was a moratorium. That gets lifted in January. These companies, like Cheniere, are already planning an expansion for liquid natural gas capacity to Europe to take advantage of this difference. What does it mean for the U.S.? Well, unfortunately, it could mean more expensive natural gas. How do you take advantage of it? Well, if you're going to get natural gas from the well to the export facility, it goes through a pipeline. Can't really put it on a truck. Correspondingly, you could see the spike in the pipelines. This is an example of a pipeline fund. And just to give you an idea, first, value at risk of loss, it lost 2/3 of its value during the pandemic. That's a coulda, woulda, shoulda, but not for us. We added to it during that time, reinvested dividends. What's the 5-year result? 139% total return, 19% average, and the companies are still trading somewhere between 3 and 7 times cash flow, which if we could buy real estate at that price, we would be all over it. I'm Spencer McGowan, President, McGowan Group Wealth Management, your financial weatherman with your global fast-paced tour of the financial markets. I'm taking you to Argentina. I did say it was a global fast-paced tour, right? Javier Milei. All right, there's a premise going on here about Trump taking office and massively cutting federal spending. If you cut spending by $1 trillion, well, initially that comes out of GDP. That'd be like a minus 4% on GDP, technically a recession risk. Well, let's take a look at what's happened in Argentina. Javier Milei gets elected, takes office right here. This is the Argentinian budget deficit. They were spending a lot more money than they actually had, and they were borrowing it, and inflation was running at some massively ridiculous percentage. Well, he cuts government spending, and you would think, man, that could be a recession in the stock market because that money doesn't go out for whatever purpose it's being spent. Anyway, budget surplus. You add these up, Javier Milei immediately took Argentina to a budget surplus. It can be done. Well, was that bad for the stock market? All right, here's Javier getting elected. He said he was going to massively cut government spending. Whoa, it spiked. This is $40. This is the low-cost Argentinian stock market ETF that trades here in the United States. So this is in dollar terms, right? So that adjusts for inflation, right? But here, $40, $82 this week. The stock market doubled. Wow, from the time he took office in about a year. I'm not forecasting that for the US market, but if you're worried about cutting government spending, well, that says it could be a good thing. All right. Now, this is the Dow year to date, a spike back over 44,000. Retailers had good reports except for Target. Target missed the target. But everybody else had good results. Williams-Sonoma spiked 20%. Walmart hit an all-time new high. And that powered the Dow this week back over the 44,000, which was the level that it first hit immediately right after the election. So, bull market appears to be intact. 8.2% earnings growth over last year. The retailers came in with good numbers this week. And it's not quite the double digits that were forecast, but we got some double-digit forecasts for the first quarter, the second quarter, and third quarter next year. And that would be a more justification for some of the levels. But you've got rampant speculation going on. So that's the danger signal. Whoa, what's this? Bitcoin, 99,500 per coin for the first time in history. And people had predicted, it could go to 100,000. Digital Beanie Babies are going to be a big topic in the podcast next week. So you got Apple Podcast or Spotify. Preston's Lane. We're going to cover how ridiculous the speculation in crypto has become. It's just a frenzy. People buying stupid stuff. Bitcoin, yes, will have a future. Yes, there's a limit at 21 million coins. However, the ability for Bitcoin to go back under 50,000 is actually pretty strong if there's a crisis. And you go back to 2020 during the shutdown, Bitcoin had gone from 20,000 to 3,800. So when you needed that asset the most, it wasn't really there. All right, what's this? That's a bad chart there. We've covered this before, but it was worth reiterating. We're going to do a year-end trading package for the profitable solar companies. This is the big run-up. iShares Global Clean Energy Low-Cost ETF, trades on the exchange, went all the way to $30. Wow. This was back when we were net zero. We were going to go net zero by 2030 or whenever, and people aren't going to use oil and gas anymore. And everybody piled into the renewables. And there was a lot of virtue signaling around that. Now, this is a capitulation sell-off. It's absolutely brutal. Why? Tax loss selling. Everybody's got some gains. They want to offset them with a taxable loss. A realized loss, and that lowers taxes for next year. You're at the height of tax loss selling season. Started with the mutual funds right before Halloween, individuals that'll run through the end of the year, and this could be one of the best year-end trades, but only for the profitable solar companies that can prosper without being on government welfare. I'm Spencer McGowan. Thank you for tuning in. Go to networthradio.com. You can contact us there. We serve affluent families right from the Crescent in Dallas. We're really good at Zoom calls too, by the way. We'll show you the client portal, a sample portfolio, and we'll draft your plan for 2025. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the Longer Play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.